Kim Anderson, our crop marketing specialist, joins us now. Kim, kick us off with what's happening in the grain markets.
Well, you know, the WASDE report came out last week, and that drove grain prices higher. So you had wheat prices, they're up around $6. Now, these are general prices, around $6, corn around $5. You got beans around 13 bucks and sorghum around $6.60. You look at forward contracting for harvest delivery, wheat $6.20, corn $4.35. Soybeans at $11 and grain sorghum at $5. Relatively good prices. We've had good price moves over the last couple of months.
You mentioned the supply and demand report. Is that the main reason behind the price increase?
I think it's a good part of that. It's showing that the supplies are going down. You look at tight stocks with wheat in the United States. The hard red winter wheat ending stocks they were 506 million bushels last year. They're projected to be 334 million this year. All U.S. wheat going down from 1 billion bushels to 836 million, both of those well below average. Look at U.S. corn going from 1.9 billion down to 1.7, again below average corn ending stocks projected. And soybeans going from 525 million bushels, you know, they were up around 900 million year before last, down to 140 million. So that's really tight soybean stocks. And we've had good demand, good export demand for wheat and for corn and beans, and China's really been buying a lot of milo.
With this happening, any concerns about price levels?
I think there are some concerns, especially with wheat, but you look at soybeans, 140 million bushels, just not many beans in the bin at the end of this. But you've got Brazil, they've got 50% of the export market. They've got a crop coming on that they'll be harvesting soon. U.S. with 36% of the export market. We got tight stocks, so that bean price should be relatively stable, may move a little higher depending on Brazil's production. You look at corn, you got 3 countries that have the biggest impact on corn exports. That's Brazil, Argentina, and Ukraine. The 3 of them, that's 53%. About 2/3, or a little more than 2/3 of that 53% in the southern hemisphere, and that corn crop's coming on down the line. If it's a big crop, then that could hit the corn prices. Wheat, you've got record world wheat production. You've got record world wheat ending stocks. You've got record world stocks to use ratio. There's a lot of wheat around the world. You look at the world's milling wheat, it's about average on ending stocks, about the same as last year, but you got lower hard red winter wheat stocks in the United States. That'll support prices, but I think wheat prices are at risk.
With all of this in mind, and this is quite a picture that you're painting for us, could prices start to decline again?
I think they could. You can get a big crop, corn crop down in Brazil and Argentina, big soybean crop in Brazil. I think corn and bean prices could go down. I don't think there's as much risk as wheat prices when you've got a big wheat supply around the world. Now, the next exportable wheat crop is the United States. So I think remain strong. However, it could back off a little bit.
With all of this in mind, what should producers do if they want to take advantage of these current prices?
I think their decisions should be based on whether or not they can sleep at night. If they're worried about forward contracting a price, and if they're worried about prices going up and they can't sleep because they forward contract, don't forward contract. But if they're going to worry about prices going down, then forward contract. I think the decision should be based on whether or not they can sleep at night.
Which applies to a lot of things. Kim, thanks a lot. We'll see you next week.